The most important earnings report of 2024 just dropped, and we need to talk about it. Welcome back to the 5-Minute Peel, Apes. My name is David, and of course, today we are breaking down NVIDIA. I have ruined my entire evening last night and morning today by breaking this down and reading every word along that thing, so stay tuned to the very end for our rating on NVIDIA, their latest earnings report, and what's going to happen going forward. All right, you guys know how this goes already. I'm going to pull up and share my screen, and we're going to break down everything NVIDIA. This company, it's ridiculous. They're like, we all had that person at our high school that was they were a straight-A student, captain of the football team, president of the debate club, probably went to Harvard and then Stanford, and then they cured cancer and won the Super Bowl in the same year. Now they're coming to steal my girlfriend. That is NVIDIA. NVIDIA is just the corporate version of that person, and the fundamental performance has been absolutely ridiculous. So we're just wondering at this point, where is the limit? Every company has a limit. Where the hell is it for this company? If there even is one, maybe we're starting to see something really, truly significantly new with NVIDIA. Okay, so the company's stock price is already up about 10% on the day, so that renders this completely inaccurate. Probably closer to about $2.4, $2.5, $2.6 trillion as of right now. More than tripled over the past year, and it's not difficult to understand why when we break down the fundamentals. Revenue more than tripled to $26 billion on the year, growing about 18% quarterly, smashing analyst expectations. Gross margins also hit an all-time high at about 75%. Operating margins followed the same trajectory at 65%, setting margin records, revenue records. Completely fucking ridiculous right here. Operating cash flow joined in on the party as well, growing to $15.3 billion, more than 5xing over the past year, up 427%. Net income followed a very similar trajectory there too, completely ridiculous growth at 14.9 billion, more than 5xing over the past year. That translates to a GAAP EPS of $5.98 a share, more than, once again, more than 6xing over the past year. Actually, 7xing, 629%. That's more than 7x right there. And it's higher than the net income growth because they have been buying back shares as well. Gaming revenue was really the only sore spot of the report, coming in at $2.6 billion, or an 8% decline quarter over quarter, but still ridiculous growth compared to the prior year. Free cash flow came in at an insane 14.9, just under $15 billion, also more than 5xing on the year as well. And the company has a free cash flow to net income ratio of just over 100%. Completely ridiculous. You absolutely love to see it. There really isn't much to complain about. So let's talk about how they kind of performed against the market's view and what they mentioned going forward. So first and foremost, we have to highlight that non-GAAP EPS smashed expectations as well at $6.12. Revenue obviously cleaned the clock of expectations like we said. They also announced a 150% increase to their dividend all the way to 1 cent per share. Can you believe it? Well, that's on a post-split basis, so it would be the equivalent of 10 cents per share right now because they did announce a 10-for-1 stock split at the same time. This should not matter at all. Do not delude yourself into thinking that a stock split does anything besides allow retail traders to pump it. So it probably will spike in the short term just because retail traders will think that something different is happening. But basically all that means is if you own one share of NVIDIA at $1,000 per share right now, once the split happens at the beginning of June, you're going to own 10 shares at about $100 per share. That's all that means. In terms of guidance going forward, the company expects $28 billion in Q2 revenue, plus or minus 2%. That implies 7.5% growth, which is the slowest growth that they've seen in at least a year. So that's, kind of a bit of it's causing you to scratch your head a little bit and start to think like maybe has this growth story run its course? We'll answer that in just a quick second, so stay tuned. But the market did expect Q2 revenue guidance to be around $26 billion. They completely smashed that in Q1. They do expect gross margins to fall to about 74.8%. And be in the mid-70s range for the entire year. That is still up compared to last year at 72%, but, it might not be at that peak that they achieved last quarter. Other than that, they expect a 40% increase to net income, $300 million in net other income. And it does imply net income growth to slow dramatically, but when you're slowing from more than 5xing at 430%, it's really not that bad of a situation to be in. So if we scroll down and talk about our thoughts so far, past 4 to 5 quarters, I don't think it's an understatement to say that this has been one of the most impressive performances in the history of financial markets. But at this point, you have to start asking yourself, where does growth cap out? Where is the limit with this company if there is one? Already, they're projecting the slowest growth in over a year for the next quarter, so maybe we're kind of at that right now. But you have to keep in mind that the company has a nice little flywheel for itself because they have this venture business. They've been one of the biggest venture investors over the past couple of years. And effectively what they do is funding AI startups and other, companies that use their chips. They're basically saying, we'll give you money, go build out your product. And these companies, if they're building LLMs or other AI models, they just come right back to NVIDIA to buy those chips, and NVIDIA keeps funding them, and wash, rinse, repeat, and the cycle continues. So they've built a very nice flywheel for themselves. They really have been untouchable, but is the risk going forward more to the downside? Well, it sure doesn't seem like it. Although, if we go ahead and take a look at the past year of earnings data, basically what they've reported versus what they had guided for, NVIDIA has beat on revenue by an average of about 13.14%. This is quarterly revenue, by the way, keep in mind. So what you're seeing in this dark blue line is the guidance that the company gave in the prior quarter, and in the lighter blue is the actual reported. And so this blue line that you're seeing is the beat percentage, and then the final gray line is the growth implied by that projection for the next quarter. So as we can see, the beat percentages and the growth implied are starting to trend lower. That might be cause for concern, but if we scroll down and compare 2023 to 2024, or I guess what NVIDIA would call 2024 to 2025, we can see that it's definitely slowing, but really is not that bad. So 2024 revenue growth was about 125%, and right now, based on the guidance and the implications of historical growth rates, we would expect revenue to be growing at about 102% in fiscal 2025. On the income side, that translates to 581%. Holy fuck, that is completely ridiculous for fiscal year 2024, and that's going to be cut by about half coming into 2025 at 261%. So it's reasonable to think that like maybe the market is saying, okay, growth is slowing, they don't deserve so much of a valuation multiple, or, you know, whatever the reason might be for the share prices to decline. That could be a reasonable story going forward. Really, the only problem with that is that fundamental performance is absolutely the only thing that has risen faster than Jensen Huang's ego over the past couple of years. So even with our liberal assumptions, it's very tough to be coming up with a bear case for this. I really wanted to. Uncertainty around macro and competition is really the only bear case, so it's kind of non-compelling to be looking for a downside. I really wanted to take a contrarian view, but it was basically impossible, especially when factoring in their valuation trends. The company is still cheaper on a next 12-month basis than they have been over the past 3 years. Barring this little dip that they took at the end of 2023 and coming into 2024, it really has been, I mean, how can you be mad? The fundamental performance is ridiculous. The valuation is still lower and right in line with that of other tech companies. It's not like Tesla, when they ran up in their valuations, were way the fuck higher than the Microsoft, Apples, and Googles of the world. NVIDIA is right in that ballpark. So it's really hard to be coming up with a downside perspective based on evaluation data alone. So if we go ahead and look at fundamental performance and factor that in with the declining valuation over the past 3 years, it's really hard to be arguing for a bear case right here. And trust me, I was really, really trying to. So right here, we're graphing out revenues, operating income, net income, and free cash flow. And what do you know? Every single one of them is nothing but up and to the right at a ridiculous rate. So all in all, what is the summary of our thoughts? Very impressive fundamental performance and declining valuation makes it very hard to bet against NVIDIA, despite how badly I wanted to. The macro narrative seems to be becoming a bigger factor for this company, especially when it comes to rates and VC funding, but those two kind of feed off of themselves anyway, because if rates decline, not only is that going to be good for NVIDIA on a multiple basis because equity multiples tend to expand when rates decline, but also that's going to be great for the startup funding environment. There's going to be more AI startups and they're going to come and buy more of NVIDIA's shit. So not only does it help on the multiple side, but it helps on the fundamentals as well. The rate story, despite all the kind of hullabaloo going on about it right now, the overall story is still lower, especially if you ask JPOW. Even if chip demand does slow or if NVIDIA loses some market share, they're so dominant that the moat remains very, very wide. Now, even if this did slow down, like their revenue, their data center revenue slowed, which it's absolutely not doing. It was actually at a record of $22 billion. They still have auto, gaming, and professional visualization and PC AI. So, I mean, they have all of these other very high growth sectors of the economy to kind of make up for that, especially if Tesla's FSD launch at the beginning of August actually does come to fruition. And if that triggers other car companies to want to kind of hit the ground running on that, then you have Tesla, Waymo, GM, Cruise, Motional, all these other companies that are going to be buying NVIDIA's chips for their self-driving units. The odds of chip demand slowing anyway is very low. This new idea of AI factories is completely ridiculous. So I guess, you know, in the fourth industrial revolution, we're moving away from smoke-filled factories and child labor and going more towards artificial intelligence, which probably seems like a good step for humanity. The company also announced all those buybacks, dividend increases, and stock splits, showing that they are trying to return capital to shareholders. This really has been one of the most impressive stories in the history of capitalism, and I don't think that is an overstatement whatsoever. Barring black swan events, it's really difficult to take a contrarian view of this company despite how badly I wanted to. we're going to be on the lookout for competitors, geopolitical risks, and antitrust risk going forward, especially as it relates to selling in China and then dominance in VC funding. As we all know, Walking L chairman of the FTC, Lina Khan, has had a big problem with big tech companies, so she might just fucking open a case against them just for the fuck of it. We do want to keep an eye on CapEx and R&D, especially over the next year, because both of these have been trending lower as a percentage of revenue, and that could harm the long-term moat of this company. So if that trend continues to be lowering over the next year or so, we might have to cut a few bananas off of our rating, but as of right now, it remains the same. The AI narrative falls from Unlimited that could threaten the valuation, but fuck it, that's not going to happen. Potential for investment losses is kind of really the only thing. If, a lot of their investments in other companies or in startups was to fall quite a bit, that could hit net income in the intermediate term. But it's such a low risk that we're still slapping 4 out of 5 bananas on this bad boy, because you absolutely cannot complain with anything that we're seeing right here. Now, we didn't get 5 out of 5 bananas. That is restricted for screaming buys, like buy this thing, get a new mortgage and put it all into this stock, because that's reserved for companies that have, ridiculous upside remaining. Yes, NVIDIA might double again, but then it would be the biggest company in the entire world. And we don't necessarily want to come out here and say that, yes, NVIDIA is going to unseat Apple, Microsoft, Saudi Aramco as the largest company in the world, although they certainly have had the most impressive performance over the past couple of years. One of the most impressive performances in the entire history of capitalism. And again, I don't think that is an understatement whatsoever. That about does it for us here today. Happy trading, happy investing. Let us know what companies or macro events or really anything else you want to see us react to next. And other than that, have a wonderful day. We'll see you soon. Bye now.